You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of indeterminate length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Tuesday, 15th day of May, 2018. Hope you're having a heck of a Tuesday, wherever you are, whoever you are. But I am glad that you've chosen to join us today for this radio broadcast. We're in our second decade of broadcast history. If you're new, grab your day planner, pencil us in for the next decade. It's going to be an exciting one, not one of anemic growth. Write that in your planner. Let's see if it plays out. Lots to talk about, lots to cover, lots going on. Stock's not doing so well, and of course we'll get into that momentarily. For those of you that are returning, welcome back. If you're here for the very first time, a special welcome to you. If you cannot see the chart I have up, go to our homepage at cfrn.net. On the right hand side, click the big microphone, follow the instructions. You'll be registered in 30 seconds. You only have to register once per month, so Do it today and you're good through the end of the month. Come 1st of June, you'll do it all over again. If you do it June 1st, you get 30 days in exchange for your 30 seconds. That gives you access every day, one click, to the discussion, to the charts, to the chat box, and answers, of course, to your trading questions. So, glad you're here, because I got some stuff I want to lay on you. Now, Michael's going to pop in just a second, because today is Tuesday, and Tuesday is the day that Michael does a webinar for our new partners, for people that are on the trial. He kind of goes off the beaten path and shows you some of the things that our tools can do that we don't really talk about in the live training room, because as I was explaining yesterday, in the live training room, everything is rules-based. You always know what to do, when to do it, and we don't want to complicate that. For people who are new to trading, which is about 5% of our partners, or if you're part of the 95% who've tried and tried place to place and somehow it's not coming together, we want to give you something that, well, our spreadsheet of 5 years, the proof's in the pudding, but the simplicity of it will open your mind. Elegant simplicity. And let us all wish a happy birthday to Coinbase. On its 6th birthday, Coinbase received high praise from Shape Shift's Eric Voorhees. He tweeted, "Coinbase remains the most successful and important company in the crypto industry." Arguably, that is very much the case. The San Francisco-based cryptocurrency exchange, with its bare-bone menu of offerings, combined with its easy user interface and relatively smooth onboarding, almost no upfront deposit needed, provide an envious business model. Now, that's not to write the company is without faults. It has had its problems. In fact, it's had many. It might not even be the future of retail crypto access, and perhaps it shouldn't. Today is Coinbase's 6th anniversary, and the COO wrote, "We're celebrating 6 incredible years working towards our mission to help create a more open financial system for the world. We're in the early days of our mission, and there is still so much to do. Have to know when to follow the rules, when to bend them, and when to push to change them. However, breaking them is neither ethical nor sustainable." Now, Coinbase is probably less of an exchange proper and more of a conservative cryptocurrency bank. It might be fair to simply label it a broker without bids, asks, limit orders, margin trading, etc. Coinbase, founded 6 years ago this week, is arguably the most important company, regardless of its technical classification, within the space. It alone is responsible for introducing millions and millions of Americans to the wild phenomenon that is decentralized currency speculation. So when somebody goes, are you trading them bitcoins? You can say, no, what I'm doing is I am speculating on decentralized currency. You should get a t-shirt. I'm a decentralized currency specialist. Ooh, yeah, that sounds good. Offering Bitcoin Core, BTC, Bitcoin Cash, and Ether and Litecoin, its sparse choices work to underwhelm those new to spending on cryptocurrency. The format is light and only requires a linked bank account. Without the bother of having to hold and maintain decentralized currency, users can simply use the Coinbase client and trade for fractions, sometimes as low as $2. Fees, of course, do apply. Current statistics say that Coinbase had something like 13 million users Back in 2017, they had 100,000 new signups every 24 hours. They actually had to shut down at one point because they, try processing 100,000 new clients, or clients, period, in any business. For a little while there, Coinbase was a top 10 downloaded application in the Apple Store. Its yearly revenue eclipsed the venerable legacy houses such as Charles Schwab. Now, think about that. How long has Charles been around? And I'm not talking about Trade Like Chuck. I'm talking about Charles Schwab. You've heard that name since you were a kid. Now, this guy, Coinbase, eclipsed them in yearly revenue. That's kind of a big deal. It continues to nab top professional financial sector talent from TD Ameritrade. It poached Facebook's messengers, David Marcus, to join its board. And the two, the Ameritrade headhunt and the Facebook headhunt, are exploring ways to exploit the social media platform's giant user base in terms of blockchain technology. Probably a proprietary token is in the works. You think? We talked about that yesterday. Heck, even its alumni go on to do big things. Charlie Lee of Litecoin fame was a former director of engineering. Merchants Dell and Expedia use it as a point-of-sale processor. For trading professionals, its Coinbase exchange was rebranded to Global Digital Asset Exchange, or GDAX, becoming one of the earliest to offer Ether to financial pros. For better or worse, Coinbase is the most prominent version of mainstreaming the crypto revolution. Its young CEO, Brian Armstrong, barely 30, feisty, ambitious, cocky, and sporting for market share. Its founders are largely an embarrassment of riches. We should all have that problem. Demand so great the company system crashed a few times during the run-ups of 2017, and its customer inquiries languished at times in 10-day backlogs. Armstrong fired back, "There's so many people rushing into the space. If it's a bit of speculation, I'm okay with that. But we can't guarantee the website's going to be up exactly when you need it. Everybody just needs to step back and take a deep breath." Now, that particular hiccup hasn't been put away altogether just yet, as in January of this year alone, formal complaints to the Consumer Financial Protection Bureau rocketed by more than 100%. That means if they got one last year and they got two this year, well, there you go, but I'm sure it's more than that. Almost half were filed regarding money not available when promised, which is no small matter. Coinbase has blocked the official @WikiLeaks shop from its platform without notice or explanation. You can continue to donate Bitcoin to WikiLeaks at wikileaks.org/donate. I'm not sure why they threw that in. Now, I could go on, and maybe I will later in the show. But for the more cyberpunk among us, yeah, that's me and you, cyberpunks, it's critical to acknowledge the truth. Coinbase is good people. But Coinbase is also in bed with the same folks who prompted crypto's birth. That won't do, and won't do by a lot. If censorship, resistance, and decentralization are fundamental pillars, then we should look for exchanges in those images. Leave traditional banking schemes itching to please governments to their future slow death. So there you go. Another spot of news I want to share with you when I come back is from our site, cryptodailyinfo.com. After NASDAQ CEO blesses cryptocurrency, investors see bigger future for Bitcoin. And guess who's getting their own futures contract? Not us. Ether. Yep. It's what's coming at the CME. We'll talk about that as well when I come back. And when Michael pops in, he's going to do the recap. He's also going to give you a link to the live training room, or I'm sorry, to the webinar he's doing this afternoon. Real quick, the Dow is currently down, cash market 237 points, 1%. NASDAQ down 75 points, 1%. S&P 500 down 23 points, almost 1%. And the Russell 2000 is positive by 1.5. Go figure. In the commodity basket, crude oil is down a quarter, trading 70.64 last. Gold, what? Oh, snap. Now, we were able to take advantage of this last night because of the tweet I put out, but gold's down 26 bucks. It's almost 2%, trading 12.92 last. Oh, John will be fit to be tied when he sees that. I'm sure he's seen it already. Okay, Asian markets. The Nikkei at the close was down 48 points. The Shanghai was positive by 18 points. And the Hang Seng lost 389 points during the session. That's 1.25%. In European markets, the FTSE closed positive by 12 points. The DAX was negative by 7.5. Now remember, on the DAX yesterday, we talked about what an ominous chart we have with the DAX. And if that thing cracks, it could take the world down with it. And the CAC added 12.5 points by the close. So mixed in Europe and mixed in Asia. And because of the Russell, we're actually mixed here at home. Now the Russell is only up at this point 1/2 of a point. So I got a feeling it's going to slide into the red here pretty quick. Now I sent out some tweets last night that said to sell the S&P right there and to sell the Dow right there and the Russell right there and the NQ right there. I think I skipped over crude. It confused me. Gold right there. And I didn't do bonds. I didn't do beans. When I come back, I'm going to... Partners have probably already figured it out. But for those of you who are non-partners, I'm going to show you where those tweets came from, what I was thinking about, what I was looking at, and how much profit came out of those tweets. They were on the Twitter and also on the Google Plus blog. So let me stop and open the door for Michael.
Okay.
Take it away, big guy.
And you know what? I gotta give you something else. This morning, in the room this morning, Dwayne said, sell 2706 and look for it to get down to 2704, I believe is what you said. And it got down to 2703.
And there was a second target on that thing too.
There was a second target. The second target was a little lower, I think.
Yeah, it hasn't got there yet. It will be to, I think 2698 was the number. What we did say is that from 2706 to 2704, once you hit 2704, bring your stop up so you're only risking 2 points. Or you could just take it and run or whatever. But when I go over these tweets with you and the Concierge Trade Alerts from last night, you're going to go away scratching your head going, how's that possible? I don't know, man. Living clean, I guess. I ate a lot of vegetables. You tell me.
Not only did you eat a lot of vegetables, you grew the vegetables, right?
Well,
or your wife
my
grew the vegetables.
My wife did. It's amazing, man. She has this most incredible garden. We even have grapes. We have a grape arbor in the middle of the stinking desert. Yeah. I don't know how she does it.
In the middle of the desert. You have grapes and...
My $150 a month water bill's got something to do with it, but, you know.
Yeah, probably.
Yeah, but she's out there breaking her back, shoveling and loving it.
Does your water include sewer?
It includes, they pick up the trash. You got to put the recycles in the recycle bin.
No, well, that's all tax stuff. But
it's trash, sewer, and water.
You know, when I lived up in Massachusetts, my water and sewer were on the same bill, and the sewer was 4 times as expensive as the water.
Really? Huh.
Yeah.
Never really dissected mine. I know when I lived in Portland, we had to hire an independent company to come get our trash.
Yeah.
It was like the old days with a guy hanging off the back and he jumps down.
Oh, yeah.
You
Yeah,
know.
oh, yeah.
But the ones in Phoenix now, they got these robotic arms that come out.
Oh, yeah.
And
They got, yeah, they have that here and up in Massachusetts.
Every
now.
so often they crash the they crush the container, and so we get a new one.
Yeah, and that's taxes too.
Yeah, and just for what it's worth, Ramadan starts in a few days here. I don't know a lot about that holiday. I know it's very important. In fact, one of my designers texted me this morning and said, "Hey, Ramadan's coming in a couple days, and I don't know. You think maybe I could get paid?" I said, "Yes. Tell me that you will be able to work during Ramadan, and I will. I'll take care of you." He hasn't answered me back yet. I don't know if they can. I mean, like, we could work during Easter and Christmas, but sometimes that religion is more strict. So maybe I'll look it up.
How devoted they are.
I reset the resolution on the screen that you were seeing right before you took over.
Mm-hmm.
Did you notice did it look different in any way?
Yesterday it looked larger. When you take it back, I'll look again. I'll be able to give you my opinion.
Okay, because
I can see it right now.
Because right now it's scaled out to like 3240/2190 or something. But that's what was recommended.
Well, I mean, that depends on the size of your monitor and all that.
Well, it's 55 inches.
Yeah, I know. You got a big one. You got a big one, Dwayne.
Well, I'm not going to say it. It's so tempting, but I'm not going to say it. It's because this is family radio. So let me hit mute and you can do your thing.
All right. I'll do my thing. All right, here we go, guys. All right. Good afternoon, everyone. Today is Tuesday, the 15th day of May, 2018. We are in the middle of the month. There is a holiday at the end of the month, Memorial Day. That is usually kind of the beginning of higher gas prices in summer. But anyway, we're in the middle of the month. If you have not taken a free trial, come to the homepage here at CFRN.net. Right up here at the top, it says sign up for the CFRN live training room, 100% free trial, user indicators on our strategy. Click here. When you click there, you'll be brought to this page. And in this page, all we ask for really is your email, your first name, and how you found us. Hit that submit button. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link. If you don't click the confirmation link, you don't get a free trial. Okay, you must click on that confirmation link. All right. That is how you get into the free trial. Now, the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now, yesterday we had a red day. The last two trades of the morning, I messed one of them up. That was a $100 loss. So we would have been -5, but we were minus 105 because I took a trade in the middle of a weekly trading zone and I messed that up. That was my fault. And usually when we have a down day, we have 2 in a row. Or when we have an off green day, we have 2 in a row. But this time, fortunately, we didn't. Today, on the 15th day of May, 2018, we were plus 10 ticks on the euro, minus 8 ticks on gold, and plus 14 ticks on the ES. That put us at plus 157.50 on the morning. Today it took an hour and a half, 90 minutes, and 6 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 7 trades. So on the month now, we're up $2,042. That's over 11 days, averaging $185 a day. On the year now, we're at $15,693. That's over 90 days. Hey, 90 days and 90 minutes. You see that? See that? 90 days and 90 minutes. And we're averaging $174 a day. Okay, now that is one contract, 2 hours per day. Now, for all of you guys who are out there, let me just go and see if any of the trial guys are out there. Okay, for all you guys who are out there who are on the trial, you got to realize that we're doing just one contract, just 2 hours per day. Okay, and if you look in this column right here, that's the number of trades it took to get to the goal for the day. And this column right here is the amount of time it took to get to the goal for the day. All right. Now, once you start trading multiple contracts, it's, that amount of time is, look at here. I don't think we had a 2-hour day in there. Well, we had 3 2-hour days, 4 2-hour days last month. But, I don't know. If I were to continue trading yesterday, if I hadn't screwed that one trade up, then we would have been fine. But you know what? We all make mistakes, and I did mess that one up. Sorry about that. Anyway, getting on to what we actually did today. In gold, we had one trade set up right here. Now, what I was going through this morning with everyone was showing them how the markets actually move. All right. So, Dwayne, you got time at the Keurig right now. I was showing them how the markets actually move. They go down, they go up, 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 they go down. And then you get a big up move. And look at that, exceeded the prior swing high. That's possible trend change scenario right there.
Were you talking to me?
Yeah, I was giving you a chance. Go to the Keurig right now.
Oh, okay, great, super. Thank you, sir.
Okay. Right here where it went down, and it came up, and it went down, and it came up. You see right here, it did not exceed the prior swing high. Okay. So we're in a trend right there. And that is what the markets always do. They always do that. And for those of us who are short-term traders who don't rely on fundamental stuff, it's just technical, short-term technical traders. That's what we are. That's what I am, anyway. This is exactly what you're looking for. If you're a fundamental guy, well, then this is important on a big time frame, not on a small time frame, on a big time frame. And then you got to throw in a whole bunch of other stuff. But if you just want to look at one screen and see what's going on in one market, in one screen, in a short time frame, and be able to take pieces out of it, then this is all you need. And what we look for is, we want to take, see right here with the MA1 cross below the BBC that says start looking short. And so what we look for is a piece right there, and then a piece right there, and then a piece right there, and then a piece right here. And then right here where it exceeded the swing high, well, we're no longer interested in the downside. Okay, now we're interested in the long side. And in this particular case, it stopped us out. We didn't get our piece on the upside. But that's what we would be looking for. Okay. And, we were in a downtrend. It looked like it was switching sides. Hang on. Let me go back to this and erase all the drawings. It looked like it was switching sides, but it didn't. It faked us out. So we got stopped out once, but we didn't get stopped out again. Okay. Anyway, on the gold, that is what we had. One trade set up, and we stopped out. On the euro, we had a couple. Looks like I missed a few here, but we had a break even here. We missed along there, along there, along there, and along there. And probably another long over here, right there. And we got 4 ticks on that, and we got 6 ticks on this. That put us at plus 10. There was one more long here on the euro, bounce off of the BBC, and that is that's exactly what you want right there. The MA1 crossed the BBC, price pull away from the BBC, price pull back, hit the BBC, look down here in the slingshot, cycle is blue going up, you got green way down below. That's what you want. Okay. During the break, change directions, gave a short, gave another short, did not continue shorting. Remember, down, up, down, whoa, way up, way above the prior swing high. So now we'd be looking on the other side. Okay. crude. Hang on a second. Give me just a second.
Now, see, Keurig or no Keurig, I would never.
Okay, I'm back. On crude. On crude. What did we do on crude today? We had. Was that today? May 15th. Is this crude? Okay, so we made money here on crude that I did not account for. And we had an up close there at 70.63, and I don't know where I got out on that, but we did not account for that. Right here, there was a bounce off the BBC right here, but I didn't go for this because we weren't trending, right? So I was watching this right here. That's what I was doing. And over here, there was a momentum long trade. Over here, there was a short. This gravestone doji right here was a short. And since then, there's been nothing else. Okay. On the ES, we only had the one or two trades. Okay, I guess we had two trades on the ES. The first one was +4. There was a long right here that we had missed. And right over here, there was a bounce off the BBC that we had taken, and we got, what did we get? 10 ticks profit on that to put us at +14. So the first one, we got 4 ticks. We missed that. And then there was another 10 ticks here that put us at +14. Okay, there was a short right in here that would have worked out for plus something. I don't know why. I think it was +6 ticks. But for me, it probably would have been a break even. And it got really choppy in there. And then it made a leg down during the break. It made a leg down. There was a shorting opportunity right there. And that was it. Okay. Right now, you would think there would be a long right here. But there's, hang on. Okay. I'm sorry. Jada's dad, I don't want to be rude to him. He bought me a sandwich. God knows what he bought. Anyway, there was a long trade. Right here. There was a close above the trend line. Okay. It would not have been a valid long trade because we have not broken this dynamic resistance right here. So you would not have done anything with this right here. All right, normally that would be a momentum trade, but you can't take momentum trades into support or resistance. That's the only time dynamic support and or resistance come into play. Okay. Back to this. All right, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 15th day of May, 2018. We made 10 ticks in the euro. We lost 8 ticks in gold and made 14 ticks in the ES. So we're up 157.50. Today, it took 90 minutes, an hour and a half, maybe less, maybe more, and 6 trades to get $220 a contract. The goal is always $100 a contract. And we took a total of 7 trades. Okay, so on the month now, we're at $2,042. That's over 11 days, averaging $185 a day. And on the year, we're at $15,693. That's over 90 days, averaging $174 per day. Okay, that's where we stand on the day, on the month, and on the year. Now, oh, there's something else I got to do. If you have not taken a free trial, let's go to the homepage here at cfrn.net. Can somebody type a Y or something in the chat box? Nobody's typed anything in the chat box yet. Thank you, Alan and Michael. if you have not taken the free trial with us, go to the homepage at CFRN.net, sign up for the CFR Online Training Room, 100% free trial, user indicators on our strategy, click here. When you click there, you'll be brought to this page. On this page, all we ask for is your email, your first name, and how you found us, and you hit the submit button. When you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. We don't know that you took the free trial. Okay. All right. Yeah, I think with that, Dwayne, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. And what I'm going to put in here, guys, right now is the link to the meeting this afternoon. Mike Reed just checked in, sent an email.
I would open his mic as soon as he got here.
Okay, and John's already out there too. John was out there early.
All right.
Okay, but this is the link for the meeting this afternoon, guys. I'm going to post it right now. This is for the 1:15 meeting. Okay, that's the link for the 1:15 meeting. Okay, and Mike usually comes in. I don't see him in there. Hang on. Yep, there he is. He's in there. Okay, so we have Mike and John. Do you want me to unmute both of them?
Let me unmute Mike first and say hello to him, and then I sent John an email that Mike was coming on. I'm going to talk to Mike, and then John's going to come in and talk to me and Mike. So I'll pop open John's mic in just a second.
Okay, all right.
And I see where I made my boo-boo. Okay. No, I wanted to go here. You can see my screen, right?
I can't see your screen, yes.
No careful scripting here, folks. This is raw radio. No, that's not what I want. What do I want? Set as. Background. I'm having way too much fun. Whoa. Why didn't that go away? See how that pops now? I used a filter.
You know what? Right now I'm still looking at the
what?
The.
Don't be looking at that.
I'm sorry. I don't mean to. I don't mean to. I just can't. I can't stop myself. I gotta peek.
It should. Well, you should. On my monitor, I see my screen with the ugly blue square up there.
I see the blue square.
Do you see the rest of it?
Yeah, I see the rest and the blue square.
Okay, but now, do you see how the red pops when I laid that filter on it? It just like, bang, CFRN.
It does. CFRN
now,
pops right out.
Wait, you see the bull here?
I do see the bull.
That's market stuff. I had a bear lounging against this, and it was just too busy. So I thought, you know what? When the market goes into a tailspin, we'll just replace this guy with a bear. We'll be like those guys who say
sleeping inside the sea.
That would be something. We're definitely going up from here unless we start to break down. Yeah.
Yeah.
God, never let me become that guy. I beseech you.
We are absolutely going up unless we go down.
We're bottom's falling out unless the bulls step in. Whew, powerful. Okay, now all these toys I had open. I know you got to go to the makeup trailer and get ready for your webinar. So let me close this down. And I'm still getting used to stuff like when I drag the browser over, it goes crazy. But I did get that snapping thing turned off, so at least that's not an issue anymore. All right, let me bring up my chart.
Snapping thing. Oh yeah, that thing you were talking about yesterday.
Yeah.
Okay, yeah. So I'm looking at your resolution right now, and I mean it's clear. It's really good and clear right now to me.
But yesterday was better.
I don't know. Yesterday was almost a little blurry.
Oh, okay, good.
But,
that's what I was trying to do, sharpen it up.
But again, today I have different glasses on than I had on yesterday. Let me put on the ones I had on yesterday.
Oh, Oh, and I turned on night. I turned on night vision or something. So at about 7 o'clock at night, this gray turns to like a sort of a sand color. It's I don't know why. I guess they say it's better for your eyes or something.
Yeah, I'm sure there's a lot of things that are better for my eyes.
Yeah,
What I do.
a lot of things better than these dollar store. I go through like a pair every 2 days. Set on them, step on them, lose them. But I went the other route. I paid $400 for the really nice trifocal, blah blah. You can do anything. And
That's what I have on right now. But
and I almost fell off the sidewalk at Walmart because I felt like I was 10 feet tall. And then I came home and tried to read a magazine, and it made my head hurt. And I threw them in the drawer. Well, first I tried to get my money back, and they're like, "Sorry, those are custom made." Oh boy.
yeah, mine are reading only, and I left a pair of them on a plane one time.
So I don't know if you heard the big news. I won't read it right now, but you know how everybody got excited because the CME was going to come out with the Bitcoin futures contract,
Yeah.
which is getting better. Getting better. Now they're coming out with the Ether.
Yep. That's good. That's
Mhm.
good news. That's
Yep.
progress. That's progress.
Mike Reed, where have you been, my dear friend?
How you doing?
How are you, man?
Hey, Mike.
I'm okay. Hi, Michael. How are you doing?
You remember Michael B?
Yeah. I'm getting along.
All
Getting
right.
along.
Well, it's good to hear your voice, man. I don't know how for years you've been getting that thing every day. We didn't intentionally do anything to make you not get that email, and Michael has struggled for a couple days, I think, just to even get logged in. So I'm going to call him this afternoon and see, and tell them they're not the only party in town.
I've had issues with the
Actually,
connection.
they're the best, but I'm not going to let them know that.
They're the best party, but they're not the only party.
Yeah. Yeah.
So tell us what's going on in your life. How's the weather, the family? What do you foresee in the markets? Have we found a bottom? Have we been hoodwinked? What's really going on?
We had Fed coming into today nailed and yesterday's high nailed.
Can you speak up just a little bit, Mike? Maybe a little closer. To
I
the mic?
think. Okay. I'll do my best here. This isn't the
perfect,
best
perfect.
better. Okay. Yeah.
Much better. Much better.
We had a swing trade on coming into today and covered that shortly after the open. So, because things are all set up after yesterday in the we went to a high area where there was a breakdown. I think it was back March 15th or somewhere in that time frame. There was a breakdown. There was a gap down, and there was a low that was made, and then a bounce high. But all this happened right around on the cash index. I had to go to the cash index to check this zone, but it was 21. It was 41.47, and yesterday they went to 42.10. So, but we had there was like three levels in that area, along with some symmetrical move on a 60-minute chart. So everything came together right around 40. Let's see, we had 39.5 to 42.5, which was a 3-point band, and it hit about right in the middle of it. So that was what kind of said the high was in. So, and they did have a reversal off of that, rejected it well on the 5-minute chart. So, kind of said everything to me was likely a top, and so we started putting on shorts throughout the day, and that's how we came into the day. This morning or today, now we double bottom at 2703, which is the last of the support areas I gave for the day, right down there. So
good job.
Yeah.
This one's for you.
We had on the way down also, we had as resistance before we got down here. The second time was at 12 to 12.5 were they they stopped and came down to that 03 again. So anyhow, pretty good day so far, and we'll take it. So this afternoon I could have to go back over 12 to 13 area and not be able to get turned right down again. So.
Do you think so? You don't think the high's in for the day?
The high for that, see, the high was made on the open, basically. See, for the day session, high was made at 17, I believe, on the open. So I don't think the high is in. Oh, I wouldn't really know. They could maybe go back up and take out the high. That's
Are you trading
possible.
primarily the S&P these days? Or are you still trading some NASDAQ?
More S&P than NASDAQ lately. I traded in NASDAQ quite a bit for a while there, but I haven't for like the last month or so, Dwayne. So anyhow, it was quite a bit stronger. I don't know. Well, for a while there, it kind of lost its luster a bit. Went over 7,000 yesterday, but not doing so well today.
No.
Yeah. Was it down 89
You love
points?
a down day, and this market's been right up your alley today.
This was what well, kind of started yesterday, to tell you the truth, but then this morning I saw the gap down open. I was pretty happy to have a position on the short side. So anyhow, yeah, so far so good. Let's see how we do around.
So Trump's doing a good job. America's respected again. Interest rates are climbing. What's your overall thoughts on? I mean, it's been so long since we talked.
And I'm selling and buying at the same time. New house, so I don't know which end of the stick I'm getting. But
you're buying a new house?
I'm gonna build a new house.
Oh, you're gonna build a new house
and sell the one that I'm in. Yeah.
Now, and are you gonna move to Phoenix?
Oh, good Lord!
Nah, not too
Good Lord, why would you do that?
Yeah.
Well, I thought you might want to come and, hang out with me, office with me.
I don't mean moving to Phoenix, Dwayne. I just mean building a house.
Oh.
Build? Why is that? You say? Oh.
Yeah. Why would it?
Well, just because of mainly my physical condition.
It was rhetorical.
Yeah, I know.
But I mean, the reason I'm saying that, Mike, is because right now we're selling our building. Well, we sold our building, and Jada's parents burned down their house last August, so we're rebuilding their house. And we just bought a house, and none of this is good stuff. This is good stuff. You'd think it would be, but
no.
It's a lot of stress on you.
Oh man,
But anyway, it is what it is. You know what? I'm gonna be optimistic. Great. I'm glad you built a new house. I hope you build the house of your dreams.
That's the second one. Then it'd be almost identical to the first, actually.
Well, put me
Make
a
it
desk.
smaller.
Put me a desk next to yours. I need to get out more. That's very true.
Yeah. Well.
I rarely tweet about dead cat bounces, but this was a tag along to the original tweet. But last night we caught a little bit of a rally here, and I said dead cat bounces. The ES should hit the wall at 27.27. There's 27.27.
That's a good one, right?
Bang. And then now I guess while Michael's still here, let me just. People go, well, why there? What's up with that? Well, I'll show you. Remember, this is a 30-minute chart, not the chart we use in the live training room every day. Markets are fractal in nature, and bearish cross, price pulled away. What was I looking for? Price to pull back to the BBC. What did it do? It pulled back to the BBC, hit a brick wall, and fell out of bed. From 27.27, it dropped to 27.04. That's 23 S&P points. I'm going to walk you through how it happened later in the show on the Dow. Identical. Russell, identical. NQ, identical. And gold. It's a beautiful... Michael, to me, that's art. It's elegant simplicity. It's art. It's the stuff the universe is made out of. I mean, if you understand it, if you see it, when this happens and this price pulls away, to be able to, with confidence, say, all right, you know, now I did miss it by a little bit. It jumped up to 27, 28, 75, but I think I was way over here. Or maybe I was down here.
That one was really clear, in my opinion.
Yeah, well...
You nailed it. You nailed it. It didn't go up above the prior swing high.
Let me show you just one more. Not that I'm bragging. I'm bragging on the tools that we give all of our partners to use. And seen. Okay. It got there a little later than I thought. It didn't go straight up. It went there. And I'll save the other ones for later. I'll amaze John with those. But, I mean, guys, what... I don't know. It's not easy. This is not an easy button. But doggone if we don't make it kind of simple. Right, Mike?
Pretty simple.
Just like Mike Reed made it simple, and I understood what he was doing.
It's not always easy.
But man, it can be simple. Sure enough. So, what else, Mike? What else, Mike Reed? Talk to me. I'm going to bring John in here in a minute because he wants to say hi to you as well. But
okay. I'll have about 5 minutes.
Well, here, let me open his mic right now. If he's still by his desk, because he wanted to say hi to you.
Okay. Yeah.
Well, normally I have an engineer to do this, but I can do it.
Huh.
Just kidding.
I can do it. Hang on.
I got it. Hey, John, are you there? Welcome to the show.
Hello.
Hey, we got Mike Reed with us for just about 5 more minutes, so I thought you might want to say hi to him.
Hello, Mike.
Hello, John. How are you?
Not too bad. It's good to hear that everybody's in the room.
I listen in daily, so I get to...
Seems we're all in. Thank you. We're all on the same page today, by the looks of it. Just caught the lows of this bottom here for a bounce. The question is, will it roll over again, or will it keep going? That's the actually. Do you know this guy Carter Worth on CNBC?
Familiar. Tell me what he does.
Well, he made a good call yesterday. He just like you and I were talking about this move down yesterday, the possibility of it. He made an interesting, similar kind of a call, and basically said it would come, suddenly. It would kind of, and we did mention that yesterday. If you remember, I said this could really freak people out, this decline. Yeah. And it certainly did that today. I mean, very few people saw this coming, and it kind of, this 200-point drop was. But look, it's not as bad as it's not as bad as it looks, because the breadth at one point was minus 1,700 this morning. It's only 800 now. So what that tells you is there's a lot less stocks going down than there were earlier on. And, we're seeing, here's the thing. I think if they were able to nip this in the bud, and I noticed earlier on, Mike, you said that, we could potentially go all the way back up today. You can never rule that out in this market. If we did go all the way back up, it would be very, very bullish for the market, because, you can make the argument that if this market actually starts taking out yesterday's highs after a pullback like this, it actually would potentially accelerate the move upwards. And what's particularly noteworthy is we're actually rallying. Remember what I said a while back? When the market embraces higher interest rates, which you could argue it's doing at the moment, and it's actually starting to accelerate higher. So it was a good call on your part, Mike. Here we are, we're making lower lows on the interest rates, on the bonds rather, and the higher highs on rates, and recovering highs on stocks. So, if we get into the groove where suddenly rates, we start going down below 140 on the bonds, getting down into 137, and stocks start accelerating higher, it's probably the beginning of the run for the roses,
They need to get over 12 and a half and then stay up there. Go ahead,
Yeah.
the way I see it, not just flip over and flop over.
And our take here, Mike, is in fact Williamson just put it in the chat box, and I was thinking about it. This thing, we see it rallying to 27.16, give or take, and then we put in one more leg down.
I could see
at least
that.
one more leg down. That's kind of hot. That's why I called it on the screen,
Well,
the Williamson trade.
6 out of 7 days on the upside was, I thought were getting overdone. My daily indicators that should have gotten overbought didn't get overbought after they were really close, and then they had VIX had plunged, and finally closed up on a day yesterday, and that gave three sell signals out of 3 that I have on that indicator. So I just
Now,
to me the odds were stacked on the short side.
you use the what is it called? The NYSE. What is it? The trend?
The
No.
tick.
The NYSE tick. Now, John,
Tick.
that's one of the cornerstones of what Mike uses in his trading. It lets
Well-
him know when there's extreme volatility in one direction or the other. John, do you use that at all?
I used to use it quite a bit. I don't really use it anymore.
Okay.
It depends on the day now, Dwayne. Algorithm trading's kind of taken a little bit of the luster out of that being. It depends on the day, and it's got to mark a high and a low early in the day, or else a lot of times it's not a whole lot of use. But there are times, like this morning, it went over 1,000 right at the early high, at the early bounce high. So I mean, there's times to keep an eye on it. It doesn't go above. I mean, I don't think it's been above 1,000 for. I can't remember last time it's even done that. It's probably been a month or more. So, anyways, it's worth a watch at times.
Yeah, no. Look, it's very good. It's very good at picking extreme moves for sure. That tick, definitely.
Just at the very short term, it's got it could be a little lag, or it may just keep on going sometimes. So you got to make sure that it's kind of in sync to begin with, and then you can trust it more. So that's one kind of caveat there.
I remember when I got your book the first time. My gosh, this was probably more than 10 years ago. It was probably 2006. Read the Greed, Take the Money. And I read the book in one night. I was so excited. I sat down the next day in front of the charts, only to then realize, that was back in my trade station days, to realize that I didn't have the NYSE tick. I was paying like $300 a month for data feed. A tip, guys, if anybody that's on TradeStation, learn to write enough code to create your own little custom indicator, become a certified TradeStation developer, and you can whack those $300 fees down to practically nothing. So, just word of the
Dwayne,
wise. Yeah.
I hate to pop out like this.
No, I know. You pop in, you pop out, but just don't let it be another month before you pop back in.
Okay.
I'll get your invitation business straightened out.
Okay. All right, Dwayne.
All right, my friend. Give my best to Julie and the kids.
Will do.
All right.
All right. Have a good house, Mike. Okay. See you guys. Bye, John. Bye, Michael.
Bye.
Williamson, on your trade here, we got up to 14 and a quarter, and that may we'll see. We'll see what happens right here, but for me that's close enough. So we'll see. We'll see what can happen here. This thing's been spreading out now for 1, 2, 3, or rolling sideways for 3 hours. And what is your thought again, John, on the chart I have up, S&P?
Well, look, the way that we come off that, the way we've sold off pretty quick here. We actually put a sell stop right up above, I think somewhere around 27.13 a minute ago, and the same on the Dow and the Nasdaq.
Okay.
look, in spite of what I was saying, it's starting to go negative again. If we break down from here, it's definitely not going to be good, and we could accelerate downwards this afternoon. So unless we take out, if we were to take out that high we just put in a short while ago, you could definitely get a different outcome for today, possibly getting back to 27, 24. But right now, it's a pretty heavy market. And remember, this is only day one. This is sort of day one of the downside. And the problem is that the way we've come into this, we put in some sort of very negative looking dojis and things amongst the whole range of stocks here in the last couple of days. And when Apple is looking very heavy right now. It's almost on the low of the day. One of the shockers of the day is Nvidia. It's down drastically today. It's down about $10. Like I say, if we were able to hold here and reverse, which you can never rule out, because if some good news comes out or something, this market could easily jump back up what it lost today. Then you're definitely looking at a whole different ballgame. But when we looked at the bigger picture with the three-wave structure yesterday, and the fact that we're breaking down from that three-wave structure is potentially a problem. Now something else is going on today. Look, the funny thing is the grains rallied for a day and then they got clocked again. So they may hold. If they hold and reverse from these lows, that could be still constructive for the grains. One of the casualties of today was palladium got knocked down about $30, but it has come back very, very strongly. We actually put a buy signal right down at the lows. Mm-hmm. Just we weren't expecting such a big recovery, but it's happened, and we're only down about 13 right now. That's a very big deal because that could actually lift the metals out of this pullback. And we've talked about this 1295 area. We've come down a little bit more. We could actually go all the way down to about 1285 on the gold without doing too much damage. And as far as I'm concerned, as long as we hold about 1610 on the silver, or anywhere between here and 1610, and the metals start to recover, I think that would be that could be the beginning of an up move in metals from here. The gold stocks are not in too bad shape at the moment, all things considered. So, if there is a bit of a lift in the gold, it could certainly change everything. And remember, the gold is only going down on sort of perceived higher interest rates. Higher interest rates are bullish for gold, but we just don't know when that turning point is going to come. It came for palladium today. The fact that palladium's recovered this much could mean we could get a snapback in gold, possibly this afternoon or tomorrow. That might be it.
When I first looked at gold today, I was shocked. I thought I had the numbers wrong when I brought up the quote board. What are we down now? $27?
But the silver is off the lows, and I actually don't think we're that far off a potential reversal in the gold. When this palladium's coming back as strongly as even though it looks bad today, when you look at the bigger picture, you could argue we're making a kind of a divergent bottom here amongst the gold, platinum, silver, and everything else. And it's a very subtle bottom. And look, the last time we had a sell-off like this, the next thing you know, if you didn't buy it down here, you missed it.
Yeah.
So you have to definitely give that some attention, pay a lot of attention to that today, because while the dusts are up today, and they've kind of been sneaking higher over the last few days, they're not up that much. And if they start breaking down, they could just change the whole picture. So the other thing is the dollar was a lot higher this morning. It's come off the highs. It may be in the process of topping out here, which if it is, and we start to go back down towards 92, then I think the gold is going to get quite a lift from that. But and look, if the market goes into a tizzy this afternoon, if it really starts going down several hundred more points in the Dow, at some point the gold could snap and suddenly go up. And stranger things have happened than being down $27 and reversed upwards and reversed completely. If we did something like that, you'd almost have to say the bottom is in pretty confidently. But it's not there yet.
I would tend to agree. I mean, is this the capitulation, or is there more? I mean,
well, there may be a bit more. That's why it could go down to about maybe. Look, I don't really want to see it much lower than about 1275, 1280.
We already popped our lowest weekly trading zone.
Yeah, but if we hold in the silver, as long as the silver holds above 16, I think that's a good sign.
Guys, everybody that wants to take a screenshot, now would be the time. Go ahead, just grab it real quick. The alerts went out at 10 o'clock last night. And as you can see on gold, we said to consider selling 1310, and that turned into a $1,900 per contract drop. And man, I'll take that any day of the week. $1,900 per contract.
That's good. I was actually thinking ahead of time last night when we were talking yesterday. I was going to say it's probably going to be another good night for Dwayne tonight. I like the night we just had. So yeah.
There's been an awful. I don't feel worthy. I'm just saying. I mean, we've both worked hard and spent a lot of time in front of the charts, but of late things have just seemed to, and it's in part, I know it's due to the volatility, but things are just working the way that you always want them to, always hope they will, kind of thing. You know what I'm saying?
Listen, Dwayne, it's the discipline. I mean, the whole thing, as long as you've got a methodology, look, I mean, it almost wasn't hard to put a buyout on the palladium this morning because, common sense tells you, I mean, we haven't had too many $30 moves. I think we had one $40 or $50 move in the palladium, and I've kept kind of quiet on the gold over the last few days. We have not done any buying in the gold since this last peak. We sold this last peak, and we've just been short all the way down until this morning. And we went in a little bit higher for a little bit of a bounce, resold on the break, and we're actually short the gold right now. And the silver again from this last little high, but we're ready to. I've got buy stops just above the market, and that's what happened with the palladium this morning. It took us in at about 965 or 966, somewhere like that, and here we are at 982. I mean, that's any day of the week. That's a fantastic trade, So that's like a $1,500 trade.
Indeed, it is.
But it actually, if you look at the structure now on the daily, it kind of looks like if we close anywhere up around above 980, sort of 985, it could actually be enough to push palladium through 1,000 here in the next few days. I don't think we can go back up through 1,000 in palladium without pulling the metals back up with gold. And I think half the reason why gold's down today is because palladium got knocked out. Palladium's been quite an influence on gold and silver recently.
We drew this out yesterday, right at the end of the show, and all we had going at the time was just this little triangle.
Yeah. By the way, the lumber hit a new record high today.
Another one?
It got up to about 650 or so in the May, which is about to go expire. Got to 626 in the July, and we're coming off now. And you know what? I might even call the top today on palladium. I think the top might be in here today. There was a report this morning that said that builders are having a hard time because of rising lumber prices, and that sort of news could be sort of symptomatic of a top.
Yeah. Yesterday, when I drew this out at the end of the show, guys, you'll remember, and if you missed the show, you can always go listen to it again. I said, whichever way we take out, if you take out this lower trend line or this upper trend line, watch for a trader Vic, and then take your entry. And look at this thing. It finally broke. These are 30-minute candles, so it took 2.5 hours to break, and then it took 1, 2, 3, 4, 5 hours to come back and kiss that to the tick, giving us our trader Vic. You sell the next candle as it takes out this low, and you're in from 27.26. Really nothing to take you out, down to 27.04. And later I'll put the indicators on and I'll show you the exit. There's an exit signal built into the indicators as well, and I'll show that to those of you who have never seen it. But that's an interesting phenomena, how that happens. It doesn't always happen. There's no absolutes in trading. Very few. I know a couple, but the trader VIX it's just what the market does. You know, when you learn these fundamental things about the market, people can fill your head with all kind of stuff, books and these videos and these websites. If you can just learn 3 or 4 or 5 things that you understand to be truths about the market, that's enough. You know, you don't have to learn everything. We were talking about the NYSE tick a moment ago. Some of you are like, well, what the heck is that? Don't worry about it. You don't need to know. You got enough stuff in front of you. If you're a CFRN partner, you got enough stuff in front of you right now, more than enough stuff to accomplish your goal every day. Now, if you want to conquer the world, we're probably not your guys. I get winded going to the mailbox, so I'm not looking to conquer the world these days. Just, come in, reach the goal. And it's something John taught me many years ago. He says, my mantra is simply this: make money daily. I love that.
Thanks. And a lot of times when you there's another thing that you should take to the bank, which is always take windfall profits. So, if you unexpectedly make a lot of money, just take it, put it in because there's always another trade ahead, and trying to get too much out of a trade can mess you up, and then you don't take it, and the market starts taking back the money. It's very frustrating mentally,
Mm-hmm.
So listen, I'll be honest with you. I've had a lot of situations this year where I didn't take my own advice as quickly as I should have, and I left quite a few $1,000 on the table because of that. So a lot of times, because look, when you make $1,000 real quick, or more, there's probably a bunch of other people who in the same trade as you, and those guys tend to, they don't let the market go that far before they start take the money off the table. I'll give you an example. This morning, I actually identified a trade ahead of time, mm-hmm. because Home Depot reported, and earlier in the morning, I believe it was down about $4 or $5 on the ticker that goes on the CNBC, and I was wondering whether to sell it, because sometimes when you sell it and it's down too much, it tends to bounce. But even though the market was starting to sell off a lot, somehow Home Depot rallied back to where it was only down about $1.80 or maybe $1.50 or something like that. But it turned out to be a good sell anyway. And here's what happened. It's pretty amazing. It actually opened at around about 189,
yeah,
60, 189.50, right? It rallied momentarily higher, but only to 66, right? So to 86, 10 points higher. 66, 69, 19 points higher, which is nothing. Then it dropped. Are you ready for this? It went from 189.5 down to 185,
mm-hmm.
186 actually. Okay, mm-hmm. So that was a 3,000 point move if you're doing 1,000 shares. Then it rallied up all the way to 188. And this thing actually had delivered. It was you probably could have made more money trading HD this morning than trying to trade any other stock other than shorting Nvidia. probably would have been the trades of the day. And generally speaking, when you know in a day like today where it's very frenetic, and you do get a lot of swings, the swings are fairly easy to pick on these opening. You know, remember there's a lot of people focused on HD when it's an earnings situation.
Now,
And actually, you know, the other day when Nvidia reported, you know, it was up after hours, right? And then they slammed it down. So Nvidia actually opened at about 253, came down to about 250, and then it rallied all the way up to 260. So, you know, if you have your wits about you, you can sometimes make a lot of money pretty quickly on these stocks that tend to move, you know, on earnings.
graphics card manufacturers may be forced to offer deep discounts due to a sudden lack of demand from cryptocurrency mining farm operators and channel distributors. Demand took a nosedive in April and could remain stagnant. A lack of cryptocurrency miner demand may create discounts on graphic cards. Well, okay.
Well, that's the reason why, you know, look at Nvidia. You know, the last few days it's been, ever since it had this rebound, right?
NVDA.
It's been sort of in a $4 range between $2.60, $3 range between $2.59 and $2.56 until this morning when it gapped down and went into a free fall. You know, so that news has been piling up. Now you got this Citron research that have turned very bearish on Nvidia as well, and they think that it's going to go back to 200. So, you know, and this, like, if this whole thing turns into a bigger sell-off than we think, it probably won't, you know, we could be at 200 before the end of the week on this Nvidia, you know.
If this gap closes, boy, it could free fall all the way down to 220.
Exactly.
Maybe 210.
Exactly.
Right there.
Exactly. And even Apple, you know, after all the hype of the last few days, you know, Apple's really certainly could come back to 170, 178 or somewhere right like that. You know, it could come down another $10 or so. But it's, you know, the interesting thing is why we were talking about the three-wave structure yesterday. You know, Apple's got a three-wave structure, but it's one that went to a new high, unlike the other, you know, like the S&P, which didn't. So this three-wave structure is kind of present, you know, in it looks like we get another buy here on the market, by the way. Take another shot at it. Because, like I say, if we take out the high, it'd be very bullish. So...
Well, take a quick look here at this weekly chart on gold. Mike B wanted you to see this.
Yeah.
This is a continuous gold chart, and he wanted me to draw this trend line. And he said, John, a few weeks ago, I said gold could technically go down to 1275. Please look at the gold on a daily chart and look at the lower support line. So that's exactly...
Who said 1275?
Mike B.
Right,
the gentleman you talked to quite a bit.
Yeah.
Now, I don't typically do fundamentals, but something that you've mentioned this morning has me scratching my head. Lumber is repeatedly putting in new all-time highs, right?
Right.
And Home Depot misses their numbers. So does that tell us that people are moving away from remodeling homes, and we're going to see a jump in new construction, in new home permits?
You know, the same thing was on my mind this morning. Yeah. You know, look.
Seems like they should go up together, but, you know, I don't know. I'm not a...
You know, we don't know whether we're going through a kind of just a bit of a slow patch in the economy at the moment, or, you know, which is going to accelerate into the summer. Probably will. I mean, look, you keep in mind something, you know, there's a few things, statistics came out in the last few days, like that thing we talked about yesterday, where, you know, 47% of the people now don't know, only 47% of the people know somebody out of work. Mm-hmm. That's huge. Second thing is, you know, I mean, we jumped from 6 million job openings a couple of months ago to 6.5 million job openings. The 6.5 million. We jumped by almost 500,000 jobs. So the market is getting very, very tight. And that's, potentially very, very bullish for the economy. And look,
what does Trump
we're
do
hitting,
when there's
Dwayne,
more
we're hitting
jobs than
new
ever?
lows. We're hitting new lows in bonds today, new highs in interest rates. I mean, we've been through some accelerating. Look, we even in 14, at the last peak of the market, when we got up to 4% growth, or maybe a bit more, just for one quarter. But we never went down this far in the bonds. So the fact that we're dropping in the bonds right now, finally getting back to more normal levels in the economy, tells you this economy is really, really strong. And it's not just this economy. You've got a global economy that's, it's sort of firing on all cylinders. So it's pretty, the likelihood of, look, the bonds are a forward-looking indicator. Why are they going lower today? Are they anticipating stronger GDP, stronger employment, stronger confidence, et cetera, et cetera, et cetera? All of these things are likely to produce higher GDP and maybe higher industrial production and things like that. So the next 3 months, the next 3 months could be pretty amazing, And remember, look, we're on a timeline. If you add 9 months to August, September last year, takes us to about where we are right now. We were only just starting to lift off into the multi-thousand point run into the end of the year. So that 3, 4, 5 month period that went from September into the end of the year lies directly ahead right now, but in the economy, not the stock market. The stock market, we've already had the run up. Now we're in the economy, the economic run up.
I heard someone say the other day that all of this was pointing towards much higher prices in commodities.
Well, it probably will, but it's not quite there yet. We're at a 2-year high in the commodities, but we're just not getting the final push to an upside acceleration in the economy just yet. By the way, we got industrial production tomorrow, and we got housing starts as well. So
housing starts is a high impact. How about the other one you just mentioned?
Industrial production, and then we got an Atlanta Fed business inflation expectation. That's another. That could help the gold and silver turn around tomorrow.
From on the bonds you just mentioned, 142.17. That was our alert last night to sell 142.17. At 141.17, folks, that makes $1,000 per contract. Now, this thing still looks like it wants to drop. I went over this yesterday. From 142 to 141, $1,000 per contract. 32 ticks to a point, 31.25 per tick. So, yeah, quite a move here in the bonds. So we're probably, if that's 1,000, I don't know, it's 1,100 right now. I won't take the time to do the math. Let's see. God, there was something I wanted to ask you.
By the way, remember I mentioned sugar to you a while ago? I think sugar is the lows are in potentially on sugar. I actually put a buyout. Can the average person
trade sugar? I mean, retail traders, those of us that trade the S&P and the NQ and Crude. I've heard that sugar is a kind of a different ballgame.
It's a tricky market, but look, it's important to look at the sugar today because it's actually got a kind of a cup and handles formation, and it's breaking out to the upside.
Are you looking at
I put a buyout on yesterday at 11.25, and it's at 55 right now. 55. I think sugar is going to, potentially explode higher here in the next few days.
sugar USD. I guess I'm gonna have to go to school to learn how to use this Windows 10. It's just making me.
You see that? Nice looking formation there.
Now you just said what it was. Explain it to folks, because that's not a term I use very much. The cup and handle.
Well, you got that kind of. You see where we came. You know, we had the bottom. I mentioned it the last time.
Is this the cup and this the handle, or is this the cup and this the handle?
The cup is the handle is here. Just what's coming out right now.
Okay.
So it's a kind of a dynamic formation. As a matter of fact, the VIX. Remember when the VIX was down at 25 before it exploded higher, and it gave the clue that the market was going to tank.
Mm-hmm.
This reminds me of that VIX right before it took off. I mean, this sugar could really explode higher from here right now, and that could help the metals turn around as well. By the way, the silver just jumped here. I'm telling you, I think these metals are going to turn within the next 24 hours.
Now this cup and handle formation, John, basically you've got your cup, and then on the handle it's just that you put in a higher low, correct?
Yeah, that's important. That's
Okay.
the key, the trick.
Let me hit the silver up real quick. Now this is just straight up silver, guys. This isn't futures or anything. This is on a daily. You want to look at it on a different, an hourly, or
30 minutes, I guess, would be all right.
30 minutes. Okay. Yep. Now, you see how, guys, on that daily chart, it just looked angry and bearish, but you drill down to the 30-minute, and there's hope. Now, you're always going to see a market turn on a smaller time frame. You'll see that first, but on the smaller time frame, you'll also get more false starts. And what you have to learn to do is balance the two. And the second those two come into agreement, boom, don't miss your opportunity, because if you wait for too much confirmation, confirmation costs money. The longer you wait, the larger the stop loss you've got to put on that trade. So sometimes it's okay to get, if you see a big picture idea and then you go in with a smaller time frame so that you can execute the trade with surgical precision and use a small stop, you might have to enter that trade 3 times until you finally catch the wave or the leg that runs. But you're confident it's going to do that. So you can risk 2 points 3 times, or you can risk 6 points 1 time. It's up to you. I'm more of the, well, we can talk about it later. Okay, there was something else here in the chat box. Anyway, John, I don't know if you can offer any help at all, but you see how when I drug this window over, it just went crazy. And I turned off that whole snapping thing. I just wanted it to be like a normal window, like that. And I want to be able to drag it over, but I can't.
Mm-hmm.
I know it's operator error. It's my fault. I just need to sit down with the Windows 10 book, I guess, or some online tutorial, and let it teach me what to do. All right. The question was, I don't understand. This is from Mike B. I don't understand why my fib shows gold well past or under the 61% fib line. Well, are you on a daily chart, Mike? Now, I drew 2 sets of fibs. I went from this low to this high. That's the entire move. Then I went with just the last leg, which is from this low to this high. So I've got a 62% last leg fib retracement, and then the entire move I've got a 50% fib retracement. And so I think that's going to be some powerful support right there. When those two layer over each other, and if they do fall through, bang, then we hit the trend line.
Mm-hmm. You're right.
Yeah,
you're
Mike
right.
B, share with me if it's. Oh, and Mike P, we got a lot of mics. Home Depot missed their earnings because of the bad weather up north. That's what they've. So, how much? The thing I brought up. Again, I'm not the fundamental guy, but it just seems like lumber and Home Depot would go up together. But they did have a brutal. It's been a brutal winter on the East Coast.
Mm-hmm. Mm-hmm.
and we're having our first heat wave. It's already over 100 degrees here in Phoenix. I gotta move. I don't know where to go. And I can't. We used to think about Hawaii maybe, but with all the volcano stuff, nah. And it's kind of muggy there a little bit. I'd like to go to Africa, but it's really muggy there. We keep getting Ecuador. We want to go live on the beach, in Ecuador. That's what we want to do. And I could buy, overlooking the ocean in Ecuador, I could buy like a bed and breakfast or something, or just a huge house, and traders could come down and we could have trading camps and conferences, and it's so beautiful there. You've been there, right, John?
No, I haven't. I've been most Latin America, but I missed Ecuador.
It's beautiful. The people are wonderful. They use the U.S. dollar, or at least they did when we were there. The government leans a little to the left, but everything just seems very, very stable. And I mean, when you think about the fact that you could buy literally a mansion on a hill perched overlooking the ocean for 150 grand. Wow.
Yeah. Panama is pretty good as well. It's a bit more sophisticated, and the standard of living is a bit higher. A
lot of expats there.
Yeah. But it's it's a pretty happening place, Panama. Yeah. It's a very sort of like Miami, but further south.
Oh, wow. You know who Bill Bonner is, right?
Yeah.
And he's part of that. What is it? Travelers International, or they have that magazine that.
International Living.
International Living, yeah. My wife's followed that website for years, and she's always trying to get me to. I'm like, honey, they're that's how they make money. Because she wanted to do one of these tours, I said, let's just go to Ecuador. But the tour, I'm like, let's just go. We'll just go. We'll have fun, and we won't have to pay $5,000 for this, economic summit thing. And we did, and we had fun. Mike P says Costa Rica's good.
You know what? I've been to Costa Rica a few times, quite a few times actually, and it doesn't really grab me. No. No, I mean, I'm telling you, Panama is a much more dynamic place, and and it's it's very, very. I mean, it's the #1 retirement place in the world.
Really?
Over the last few years, it's been right up there. They've got a lot of good things for older people too. They have all kinds of discounts and things. They have very good medical. They've got what's the name of those big clinics? The Mayo Clinic, and the other one, Cleveland. They've got subsidiaries in Panama. They've got really the best of everything down there.
Where people from the UK retire and become expats? The most popular place, I had no idea. New York City.
How about that?
I mean, yeah, I want to go. I want to be someplace quiet. I want beach. I want to be able to go and enjoy the restaurants and maybe some nightlife a little bit. Have a coffee in the morning on the piazza or whatever. Take walks, ride my bike. But I have to have.
You've been reading too many international living articles.
I have to have extremely robust internet.
Well, that's one place that Panama has a huge transit, undersea internet link. So you get a high-speed internet down there as well. That's important. It's definitely. I mean, Panama is one of the highest standards of living in Latin America. And
fastest internet in the world.
And they get a lot of revenues off the canal, so they kind of have the government. It's not kind of going broke, like some of these countries.
Right.
It's a pretty well-run show, Panama.
Check this out. Scientists in the UK have created the fastest ever real-world internet connection using commercial-grade fiber optic lines to clock speeds of 1.4 terabits per second. It's believed to be the fastest speed test of its kind, and would allow users to hypothetically download 44 high-definition films in a single second. This is what I wanted, the top 10 connections. South Korea is at the top of the list.
Where was that article? Where was that article?
I'll go right back to it. South Korea, then Hong Kong, then Japan, Switzerland, Sweden, Netherlands, Ireland, Latvia, Czech Republic, Singapore. Isle of Man used to be at the top of that list. Huh. Okay, so the back to, you're talking about this. This was the independent.co.uk. I Google world's fastest internet speeds or something of that nature. Should take you right to it. What did I Google? Fastest internet in the world. I don't know if you got to misspell in. See if it still comes up. Yep. Did you get it?
Hold on, I'm just doing it now. Yeah, I got it.
Got it.
What date was that?
I'll go back to it in just a second. I'll give you. In fact, I can even just email you the link if you need me to. I just wanted to see if my speeds are holding up with the new bonds.
There was a guy. There was a guy. What's your speed there?
Yeah, that's what I'm waiting to find out. It's a long time for the milliseconds. I don't think I'm going to get what I had the other day.
There was a guy on this morning saying that 5G is going to be a very big deal when it comes.
Okay, so I got 207 down, and I pay for 20 up.
That's pretty good.
I pay for
Seems
150
to take an awful
down.
long. Seems to take an awful long time. It should have come up much faster than that, Dwayne. You got a VPN going?
No, it's just speedtest.net, and
Yeah,
it's,
that should look at 207. That thing should have just come on right away. It seems to be a bit.
well, they're actually moving a file, and well,
Why don't you try this one? Just Google Bing speed test.
Bing speed test. Okay.
Yeah, that's the one. Widget speed test. Check that out.
This thing. Maybe that'll do it. Okay. Start. 1 millisecond ping.
See how fast that came up?
Yeah.
See that?
Yeah.
That's
I've
what
never,
should.
I've never used this one before.
Yeah. It's very good.
So 169 down, and overclocking a little bit. And the upload was 24.
Do another start. Do another one on it.
I've never seen the ping come up 1 millisecond on any of these.
Yeah, no, that's fast, man.
Speed test has a app.
You should be. I
download
mean,
to
if
your
you're getting 200, you should be getting 1 millisecond. You know, that's for sure.
Interesting. So there was a question. Bruce said, with bonds in their present trend, I can't see how gold can trade anything but sideways or down. Anything you can add to that?
No, I don't agree. Look, there'll be an inflection point, and it could just turn dramatically. You know, I'm not saying it right now this minute, but at some point you'll get a rebound in the metals that'll probably surprise you. So, because higher interest rates are very bullish for metals. They're suffering a little bit from dollar strength right now, which is unusual, even with higher interest rates. So it's kind of a weird market at the moment. But look, it may not take much to turn these. You could come in here tomorrow morning. We'd be up $10 or $20 in gold. Really could happen.
Yeah. Remember how everyone was so excited when the CME was going to get the Bitcoin futures contract, and then there just wasn't much attention or participation. And I think it was Bert who told me that the CBOE, which I don't have data for, that one seems to have more volume, but the CME is picking up. And then the CME announced, I guess today, the CME Group's experience and knowledge in bringing the Bitcoin reference rate and real-time index to market has enabled us to launch an Ether dollar reference rate and real-time index. And the CME CF Ether dollar rates will provide a standardized reference rate and spot price index to bring confidence to any trading strategy. Major cryptocurrency exchanges, Bitstamp and Kraken, provide the pricing data to bring our dependable rate to the market. Now, that's something I forgot to mention to you guys. On our website, cryptoportfoliobuilders.com, and our second class is tomorrow night. So you need to go there, watch the webinar video that's free, because you can still become a member by tomorrow night. But I'm developing our own crypto index, Bitcoin blockchain and also Ethereum blockchain. And I'm not gonna give you the ingredients to the soup, but I should have it published by the end of the week. And it brings a lot of things into play, and it just dawned on me that, I could create my own index. And how relative is that? Well, we'll see. We'll see how it stacks up with some of the other stuff. Because I'll be putting things into mind that the others don't. In the final quarter of last year, to much fanfare and hype, CME along with CBOE created a first-of-its-kind crypto futures. And that was going to be the legitimate stamp and all good from there, but it kind of fell down. The experiment in running Bitcoin Core in more mainstream financial context has been decidedly mixed. Some analysts even believe futures were a significant drag on digital asset prices due to allowing speculators to short BTC. The CME is among the most trusted derivatives market makers in the world, as is a well-known player. Crypto Facilities Limited is a crypto trading platform. The two have teamed to offer the CME CF Ether dollar. So we got another contract coming, and there's one coming in London as well. So, we started watching this thing the other day, and it shows, let me get rid of all these lines. It looks quite tradable to me. BTC K8. Now that's daily. Let's get it down to something that I can wrap my arms around. I looked at the M contract the other day, and look at these moves. This is from 8,400. Now this is a 30-minute chart. So in 30 minutes, this thing went from 83.30 to 87.50. Is that a $400 move? 400 plus? Now, who was it the other day? Oh, Bert came on and he told us how to calculate this. Who in the audience can remember what Bert told us? He said, did he say call it $1 a point? Because it moves on the DOM in 5, and I'll show you, John. Here's the DOM of this futures contract for the Bitcoin. If I can drag this baby over. There it comes.
By the way, remember I said the grains might be buy here at 1,007. We're back to 1,016. So it looks like it's been a strong test of the 1,000 area, and now we're on our way back higher. So this is pretty positive. Okay.
You're good with math. You see how this goes 80. I'll go to that grain chart in a minute. 85.50. The next tick up is 85.55. Now each futures contract has 5 Bitcoins in it. So the minimum price fluctuation, like when it goes from 85.55 to 85.60, that's a $25 tick. So I'm trying to remember what Bert said. He said this is an easy way to remember it, because we're going to start trading this thing. I mean, we'd be crazy not to, and especially since I own Bitcoin Futures Live Trading Room, Bitcoin Futures Trading Course, and all this other stuff. I mean, might as well put it to use, and I will in time. It's got a lot on my plate. Inserts, indicators, volume. Okay, yep, every time I look at it on a daily chart, it's moving on up. We're up to, well, today, and today's not over, 3,400 contracts. It's coming along, and who knows, this Ether contract possibly could do better. And when people say, well, how will you trade it? The same way we trade the S&P, gold, the Dow, the Russell. We never change. We have one trade setup that works on every market and every time frame. And everybody goes, that's not possible. Well, I'm telling you, it is. Okay, right here, when we hit the BBC, we needed an up close to go long, but with this red and hook down and a step line right on top of the BBC, there's no trade. So I mean, now if I take it down to 30 minutes, will it give me trade setups there? Of course it will. If I take it down to what we use in the live training room, will that? This is the exact thing we use in the live training room every day. Yeah, I mean, we've had some issues right there over the day, but I mean, bullish cross, price pulls away, price pulls back, up close, buy the open of the next candle at 87.05, and you don't get a sell signal until 88.11. What's not to love about that? That's your sell signal right there, guys. That tells you to get out of the trade. It's run its race. Well, John, what else can we cover, or do we need to cover, or have we missed?
No, I think we've covered it all. We're getting another bounce here, so let's see how far it goes.
Oh, Bruce wanted to know what you got on coffee.
Coffee, actually, we put a buyout at about 116.5 this morning. It got up to 117.5. Still chopping around. I probably wouldn't buy it now unless it went past 118. So I still think it's going to probe lower, and the cocoa got clocked overnight. It's down drastically today. It's down 116 points. That's the biggest drop in cocoa in a long, long time. So it might have run into the highs up around 2,800, at least for the time being. So we'll see.
Now, is that a technical move, or is there something fundamental going on with cocoa? I don't know.
Well, you never know with cocoa, because the fundamentals are very volatile.
Well, and it's also the plant you get your cocaine from.
No, not cocoa.
No? What is it?
No.
It's
cocoa is chocolate.
Well, I understand, but I still thought it all came off the same. It isn't.
No.
Well, what's the plant they get cocaine from?
Poppy. Wait a minute. That's heroin. Heroin is poppies. Cocaine is the coca leaf. Coca leaf.
Okay, so it's a completely different plant.
Yeah, absolutely.
Okay. So when I had my Nestle's...
because, you ought to know, down in Ecuador and Peru, they chew that coca leaf,
Yeah, I know. I chewed some. I felt nothing. Absolutely nothing. They were all going on and on about it. I read about it I've been reading on the internet, in the guidebook. I said, my wife said, don't do that. And I'm like, well, honey, I just want to chew a little piece, see what it tastes like. I got nothing from it, but I'm sure you probably have to put a big chunk in your mouth, and it tasted nasty. So, all right, John.
Okay, listen, have a great afternoon.
Great
Thanks.
day. Thank you for everything, and we'll talk to you later.
Much obliged. Same to you. Bye-bye.
Bye-bye. Okay. Now, all right. Just so you know what happened overnight. Let me go to the Twitter. And I got to scroll down a little bit. The first tweet that went out at CFRN or the Google Plus blog is how you can follow us. Okay, where did I hide that? All right. Our earlier E-mini S&P 500 trade we posted just triggered. Target is 2718. So, what day was that? Was that yesterday? No, I don't think it could have been. Let's see. Well, it says 11 hours. I guess I got to scroll further. Oh, and I got to do a lot of scrolling here. I was a busy guy last night. Come on. Consider selling the S&P E-mini at 27.22. Okay. Now, that was like 22 hours ago. Target 27.18. So if you sold 22, didn't hit it. Yeah, so it hit 18. Alright, and then after that, we said, scrolling. Consider selling gold at 13.10. That was a tweet from last night. 13. Well, we were all over that thing. That was also the Concierge Trade Alert. And then consider selling the NQ at 69.44. 69.44, which would be right about there. And this is where I said look for the dead cat bounce. And where did I say that dead cat bounce should stop on the NQ? NQ 69.63. 69. Now this is when I put it out and I said look for a dead cat bounce to 69.63. What's this? Amazing. I'm not, again, we don't boast. We're not into that. It doesn't get you anywhere in life. But excited. I'm more excited just to see it. Day after day, week after week, month after month, year after year. Look what it did. It pulled right up to the number, to BBC, bearish cross, price pulls away, price pulls back, down close. I mean, this trade would have made you well for the day, but then you got this trade. And all I was doing was looking at the CFRN indicator set on a 30-minute chart to pull each one of those. Let's see, we did it on the ES 2727, the Dow 24850, Russell 1602, NQ 6963, gold 1313. So if you're not using these tools, I mean, take the free trial. Use the tools for 5 days, no cost, no credit card, no gimmick, no gotcha. Come in the room, ask all the questions you want, watch Michael use the tools. You can download the platform that I'm using right now, no cost. We let you use our indicators for 5 days. And then at the end of 5 days, you can make a well-informed decision whether or not what we have to offer is right for you. It's not right for everybody, but you won't really know unless you check it out. So I encourage you to do that. All you have to do is go to apply.cfrn.net. Now we said sell 24,800 on the Concierge Trade Alert. 24,800. Okay, there's 24,800, and it took us down to like 20. That's 200 points. So that's $1,000 per contract on the Dow. $1,000 per contract available. Now, you see this pullback here after the trigger. Okay. Now remember, on a discretionary trade, on the Concierge Trade Alerts, we don't want to risk more than $300 per contract. If the trade requires a larger risk than 300, we just wait for the next opportunity, because we have 16 opportunities per day. Now, but let's take a look. 24,800, and what was this pullback swing high? 24,860, yeah? 62. All right, the Dow pays $5 a point. 60 points times $5 a point is $300. So this pulled back $310. Now, you'd had to go to a smaller time frame to get your $300 risk, but you would have been stopped out, okay? Unless you used larger risk, which I don't recommend. So you take your hit. Life goes on. Important prices, important areas, almost always tested. We get back below the trigger, up, and down we go again. And if on this pullback you got stopped out, not a problem, because you dropped from 800 to 660, so that's 140 points right there at $5 a point. On the Russell, this is the dead cat bounce we were looking for. On the trade alerts, we said to consider selling 1597, which is way down here. See, the huge difference when you're able to issue a trade alert as it's happening, or you're issuing like a concierge trade alert when I'm having to envision all that can happen during the session that has just begun. I try to get them out by 9 p.m. Eastern each night. Markets open at 6. So from 97 we dropped to 92, and then important prices, important areas, back above the trigger, down we go again. So we had 2 5-point trades at $50 a point, $500 if you caught them both. In Q, we said on the concierge trade alerts, the email that everyone gets, sell 69.49. Okay, 69.49, right about there. And we dropped to 68.63. I don't know, 70 points. I'm trying to be conservative. So that's $1,400. I didn't do the math. I'll roll it back, make it $1,300. $1,300 plus $1,300 plus per contract available. Now, if there is any one particular thing that prevents you from trading the concierge trade alerts, share with me. I don't mean right this minute. You could, but you don't. I'm just saying, be in touch with me. Email, however, a mentoring session, and let me know what it is that holds you back, and maybe I can show you something that will help you. Let's see, crude oil. We said to consider buying 71.30. And we ran up to 71.92, so that's $620 per contract available. And then we also said if the opportunity presents, sell 70.75. And that came into play about here-ish. Here-ish. 70.75, and we put in a low 70.42, so that's $300 per contract available. 600 up top, 300 down below, and then if you came back, if you put your toe back in the water, you got very little, or you could have gotten stopped out there. Gold on the concierge trade alert, sell 1310, $1,900 per contract available, and it's continued to fall. Now, since I got these indicators on here, let me show you how do we know when this trade, let's say we got in at right at 1310, just like the concierge trade alert said. 13.10, I'm in. Okay, you write it down, you write it down, you write it down. Right here, you notice that the step line is crossing over the CFMA1, as are the candles, right? Now, when we have a green, this is a short trade, when we have a green candle close above the step line, that's our exit. Well, why don't you just get out now? Well, you can. However, we don't know that the decline is over. It's kind of sideways to down. But that's how you use the indicators. How do I know when the trade has run its course and I should get out? If you get a green close above the step line, take your profit and go. Now, what may happen is price may pull right back up to the BBC and then give you another leg down. Okay, fine. You could trade that too. But what you don't want to do is you don't want to let this pull all the way back to the, because once it closes above the step line, chances are it's going to do its best to get to the BBC, because price always reverts to the mean. And in this case, the mean is the BBC. You don't want to see all that profit evaporate. So close above the step line, take your profit and go. If you hit it, down close, trade it right back down to this low. And use this same method to let you know when it's time to get out of the trade. Now, could you get a green close above it, then it rolls over and falls out of bed? Sure. That means you left money on the table. Consider it a tip to the universe. Bonds, sell 142.17 at 141.17. That's $1,000 per contract. And should it get down to 140.16, that would be $2,000 per contract. Hard to see it going that far, but boy, these days you never know. Soybeans. Last night's email said to consider selling 10. What? No. Yeah, sell 1021. There we go. Which is right here. And don't we know important prices, important areas are almost always tested. So from 1021 we got down to 1018 and a quarter. That's 2 3/4 points, 2 3/4 points. And then here comes the big one. From 1021 we drop to 1005. That's 16 points times $50 per point. That's, if you're only trading one contract, $800 per contract available. Now, we never get out at the swing high or swing low. Okay, like when I put up this 800 was available, you can't have it all. Not if you're trailing your stop, because as this starts to come back up, it's going to take you out. Let me show you. Let me show you a little something. And seen. There you go. All right. You see this candle closed above? See how the step line crossed over? And then you got a bullish close on a short trade. You got a bullish close above the step line. When that candle closes, you're out. Otherwise, look what can happen. It doesn't have to go to the BBC and give another leg down. It can rip right through it. So right there, that's your get out. And so this is what you left on the table. That's one way of doing it. You can also just trail the stop manually, you know, whatever works out best for you. Oh, and the question on the Trader Vic. Okay, yesterday on the show, at the end, very end of the show, the last thing I did was I drew my mouse is too whatever. I drew this trend line across these tops, and I connected this low to this low. Okay? And I said, now, I wish I could get it over there, so yeah, kind of like that. I said, now, whether we break out to the top or the bottom, watch for a Trader Vic and take your entry off of that, not just a break of the trend line. So what I did earlier in the show was on this trend line here, I double clicked it and I changed it to array. And so what it did was it drew because this is where it ended yesterday, it drew a perfectly straight line, perfect angle right over here. And so the Trader Vic is simply when price falls through a trend line or breaks a trend line to the upside. What does it do? It comes back up, and it broke this trend line. It comes back up and kisses the underside of it, and then you wait for now remember, it could go right back over. So this is the candle right here. This comes up and kisses it. Now what? Red candle, man, sell it like you stole it right here, and just trail your stop down. Trader Vic. Had it broken to the upside, we would expect the same thing, for it to go up, come back, touch the top of the trend line, and go. Now, does it always do that? No. Sometimes it breaks and just falls. But once you start watching for this, and if you're not sure about drawing these trend lines, Google CFRN drawing trend lines with BURT, B-U-R-T. We did that, God, probably 3 years ago, maybe even more. But it's as pertinent today as it was then, because some things never change. Like the underlying rhythm of the market. That's why our indicators work, because we figured out a way to track the underlying rhythm of any market in any time frame. It's never going to change. Trend lines, never going to change. And your platform comes with an unlimited supply. You'll never run out. You'll never pay overage. You can draw trend lines till the cows come home. And don't worry about getting it perfect. Just draw them. Draw them, draw them, draw them. And see what happens. Draw them, draw them, draw them, and see what happens. You'll start to be amazed. You'll call me up. Hey, this is freaky, man. How does that happen? How does that work? I don't know. How does a lotus flower open every morning? Fingerprints of God, I guess. Not saying he's a trader, but he created everything. Even the Trader Vic. True that. So to whoever asked that question before, now you have my best answer. Mike, you want to go back to, oh, did I wipe that out? Oh, that's okay, I can put it back. Now, it could be that I'm using the continuous contractor. I guess you have to be. Get rid of this volume. Don't need that. Change this to a daily. Scrunch it up. A little more scrunching. Okay. Well, this is what I did now. From there. Yep. Now, does that look right, Mike, or does yours still look different? December low. Oh, so you need me to scrunch it some more? Okay. Okay, I'll do that. December low. Okay. Now, does that still look different from yours? Oh, the fib. Okay. The fib from the low. What in the world? Okay, let's try that again. The low to the most recent high. Maybe you were going off that high. I don't know. I'm going off that high because it's the highest high. So right now, price for me is between the 24 and the 38% fib retracement if I'm drawing fibs from the low to the high. Oh, you want the December 2017 low. Okay. I'll stop at nothing to please you, good sir. I mean, you want the fibs off of there. Okay. All right. So from here to there. And yeah, my price is sitting right on top of that trend line and right on top of the 62% Fibonacci retracement. Does yours match up with that? Okay, the fib is just from the 17th for the December low to the April 11th high, bottom of the wick. I'm not sure what you mean, Mike, when you say bottom of the wick. Which wick? Oh, you want me to pull this down a little bit more? Okay. Didn't change much. I can probably pull it down a little bit more. No, I think I overshot it. We'll get rid of this so I can see it. I can pull it a little more. Okay, now I'm at the bottom of the wick, and now I'm at the top of that candle, and I'm still sitting right on top of the 62% fib retracement. Is that what you have? Or do you have something different? Your price is lower. Huh. Well, that is odd. Okay. The low is roughly 1237, 1238. The high is 1369, 1370. And currently we're at 1289.90. Now, how many fib lines are you displaying? Well, the only other one would be that 78 down here, which I don't really use. Just personal preference, nothing wrong with it. Your low is 1249. So you're saying that your 62% fib retracement is at 1249? Or you're saying this low is at 1249? Yeah, I don't know what to say about that. I'm using the continuous chart. I'll switch it up and see what happens. GGCM. That's the difference right there. See? The swing low is, I've got 1247, which is almost the same as yours, because I switched to the June contract. That's why I tell you guys, don't trade with those continuous contracts. They're okay for charting and, you know, getting trade ideas. But when it comes time to trade, now does that look more like yours? Yes. Okay. We solved the mystery. Awesome. Welcome to the test. Genesis 22:1. The Bible says, God tested Abraham and said, take now your son, your only son Isaac, whom you love, and go to the land of Moriah, and offer him there as a burnt offering on one of the mountains of which I shall tell you. So Abraham went to the place of which God had told him. Genesis 22:1-3. And anyone in this audience who's a father, I know you've pondered this one before. You say, why would God test me? First, to prove himself faithful to you. Second, to give you an opportunity to prove yourself faithful to him. So your tests are God's proving grounds. They're the way you graduate to the next level in his kingdom. Have you noticed that until you pass the class, or until you pass the test, you keep repeating the class? You know, like, why does this keep happening to me? Well, because you won't learn the lesson. At the second you learn the lesson, you get to move to the next class. Okay. That day, Abraham proved there was nothing he loved more than God. And that was the day when God introduced himself to Abraham as Jehovah Jireh, the Lord who provides. It's when you exercise your faith that you discover God's faithfulness. That's why God will test your faith. The tests get progressively harder as the stakes get higher. And the tests will undoubtedly revolve around what's most important to you. What do you find your identity in? What do you find your security in? That's your Isaac. Maybe it's your job. Maybe it's your bank account. I don't know. What is your Isaac? You should ask yourself that. God will test you to make sure your identity and your security are found in Him alone. Want to lose that bank account? Let God get wind that it's more important to you than Him. Look out. Indeed, He will go after anything you trust in more than you trust in Him. Now don't worry, you don't have to live in fear that God is going to take away everything that's important to you. But if I love my new browser. He will go after anything you trust in more than you trust Him. But don't worry, you do not have to live in fear that God's going to take away everything that's important to you. But if the gift ever becomes more important than the giver, then the very thing God gave you to serve His purposes with is undermining His plan for your life. And that's why God will deal with it. Sounds to me like a call to prayer every morning. God, I love you. I trust you. I put all my hope, my faith, my heart, my mind, my soul in you. I thank you for the house, and I thank you for the car, and I thank you for the job, and I thank you for the bank account. But you know what, God? If they were all gone today, and all I had was you, I'd be on top of the world. And you got to mean it. Trust me, He knows when you're lying. Think about it. What is your Isaac? What is your Isaac? Oh, Jim, you're gone. And I know we're not supposed to speak ill of the departed, but Jim will sit in here all day. Nobody knows Jim. And then he'll make a really snarky comment as he slams the door on the way out. Why would somebody do that? I mean, why not just have a discussion? We could talk about it. Remember 3 weeks ago? Curtains for the $1. Gold will go through $13.80 like a hot knife through butter. Did any of that happen? Of course not. It never does it? Well, I don't know what universe you live in, Jim, but yeah, it happens all the time. Kind of like, I don't know, selling 2723 for $1,000 or another $1,000 or whatever that was, or $1,300 or $600, and I forget how much that was, or $1,900. Speaking of gold, 1,000 plus, yeah, 800. Jim, I know you're not here, so you can't hear what I'm saying because it says you logged out. You always make the snarky comment and run, but, well, I'm not saying you run, but you leave. I wish you'd stick around and talk about it. I don't know what it is that you don't understand about what we say and do, because we're about as transparent as you can get. Not only do I send out the email every night, and I think perhaps you're ragging on John a little bit, but you know, Why don't you do that when he's here to defend himself, okay? I send the email out at night, and then I come on the radio show, and I show everybody the email I sent out last night and the time. And all the people I sent the email to are sitting in the audience. So how could anybody... I mean, yes, in the financial markets, it's so easy to pull the wool over people's eyes. It's ridiculous. But we don't. We're truthful. We have a bad day in the training room. We don't just go, we had a red day, and move on. We walk you through every move, every trade, just like I do with the trade alerts. That's the truth about trading, you know. And I know there's people out there that say harsh things because we're Christians and blah, blah, blah. But you know what? There is no one that ever went away from CFRN unhappy, other than the fact that they wanted to be unhappy. Because we give you everything we have. First we let you sample it for 5 days, so you know it's really what you want. You say, oh yeah, I want some of that. Okay, well, here. And then I offer myself up as a living sacrifice, unlimited one-on-one mentoring sessions. Good God, what kind of insane person would offer that? Well, I figure I can teach you enough in the first 3 or 4 mentoring sessions. You probably won't bug me again for a month. And if you do, that's okay. Sometimes it's like 2 sessions a week in the beginning, and then it becomes 1 session every 2 weeks, and then 1 a month, and 1 every couple months, and then pretty soon I haven't heard from you in a year. Call you up, how you doing? Man, I'm doing awesome. How you doing? Anyway, I love you all. Mike, define continuous. Sure. This chart is the June contract. Okay? This is the June contract in gold. Do you see how it gets really sparse back here? Because nobody, back in 2016, nobody was trading the June, or very few people were trading the June 2018 contract. Now, on this platform, if I go at GGC, they manually stitch them together so that you have a continuous flowing chart that goes back for years. It embraces all the different contracts. If you're on TradeStation, I think TradeStation automatically runs a continuous chart. It's been so many years. Does that help, Mike? Now when I say continuous, you know what I'm talking about? See, some platforms you don't have to do it, others you do. Well, I prefer the continuous when I'm charting because I want to be able to see back as far as, I want as much data as I can grab. Okay? See, I'm going all the way back to 2015 here. So from 2015, I can go like that, going all the way back to 2015. The more information I can pull in, the clearer my vision of what the markets are going to do. Now, would I trade off of this? No, because you and I just saw that price discrepancy of like 10 bucks. When it comes time to trade, I'm going to go to the current front month contract to actually place the trade. That help? So, and I don't always use the continuous for charting, only if somebody wants a really big picture outlook. Because on the June contract, it's pretty stout all the way back to July of last year. It's when you see this kind of stuff, yeah, you can't calculate that. Now, right about here, definitely here. Yes, but you are below it now too. I don't know what you're talking about. Well, I'm on the monthly chart. Well, that's because price just fell below it. This is the June daily contract. From this low to this high, that's the 62% Fibonacci retracement at 1297, and the current price is 1289 or 1288.2. The price just dropped through that 62% Fib retracement. And I gotta say, guys, that's opening up a window of opportunity. I'll leave you with this. Consider being short if the opportunity presents. 1275 to 1265. Consider 1275 to 1265 if the opportunity presents. Now, don't try it with an 8-tick stop. If you do, know that you might get stopped out a couple times before you catch the leg that actually runs, if it's going to run. 1275. You know, the beautiful thing about trading is you can switch it up when you need to. I see something that I like even better. Now, people say, well, it's not going way down there. Well, I'm not saying it is. Not at all. What did I say? If the opportunity presents. Well, what if the opportunity presents not today, not tomorrow, but Thursday? It's still valid, except for that 1 point differential I taught you about yesterday. Mike says that is not the chart you had before, because the chart you had before, it's the daily trend line at 1275. Okay. I think you might be getting concerned over. Okay, you wanted me to draw a trend line off of December of 17. Okay, I will. Yeah, right? That's what you wanted me to do earlier? Well, I mean, I don't have any other chart to have. I've got the daily June contract, and I've got the daily continuous contract. I don't have any other contracts. So I didn't mean to confuse you, but those are the only two I got. Now, if you want to do a mentoring session or something, or if you want to get together with me afterwards, we can share screens. And if you think you have an issue, or maybe I got an issue, I'm happy to spend a little time with you and try to work it out off air. So let me know. Shoot me an email. support@cfrn.net. Okay, guys, that's going to do it for today. Thanks so much for tuning in. Tomorrow night is the second class of... Oh, I said I wasn't going to drag this browser over again, didn't I? Let's try this. Yep. Okay. CryptoPortfolioBuilders.com. Okay. Class every Wednesday. Really? every Wednesday, 8 p.m. Start building your portfolio today. As I explained yesterday, we are 92% cash, 8% invested over 8 different currencies. This is a long-term portfolio. This isn't a wake up one morning and go, oh wow, I made 10 grand last night while I slept. I'm not saying that can't happen, but that's not the purpose. This is a long-term portfolio. Cryptocurrency is an asset class that should be in, I believe, every diversified portfolio, which means you've got exposure to stocks and to bonds and to metals and to whatever suits your fancy. And inside of your stocks, you should be exposed to different sectors. And in your crypto asset class, exposure, and we will be adding to the portfolio in class Wednesday night. So if you have not been to cryptoportfoliobuilders.com, beat feet on over there, watch the webinar video that's available to the public, and if you have any questions, get a hold of me. Otherwise, get signed up, and as soon as you sign up, fire me off an email and say, hey Dwayne, I just signed up for the Crypto Portfolio Builders, and I will make sure you're on the list so that you get your invitation to the class tomorrow night. Okay, that's it. I'll see you all tomorrow at the Bell. Yeah. Oh, and Thursday night, Partners Workshop. So if you're on the trial, Mike will be sending you an email with an offer to become a partner. If you have questions, let us know. If you decide to become a partner, let us know. If you need more information, let us know. But to get into the partners meeting Thursday night, you have to be a partner. On the trial, we do let you use the platform, the indicators, our strategy, everything. Partners meetings are reserved for the partners. So if you're on the trial and haven't downloaded the platform and indicators, you're kind of wasting a week, okay? Because until you get your, roll up your sleeves and get your hands dirty, wrap your arms around those indicators, and see some of the stuff happen that I showed you, like every one of those dead cat bounces last night, I pegged them with our indicator set ahead of time, okay? Not magic, not witchcraft, technical analysis, reading the chart, and our finely tuned indicators that we've spent, we spent years pulling together, but we haven't changed in 5 years. So, okay. Once again, thanks so much for tuning in today. Wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.